amidst global supply chain pressures, commodity price hikes, along with policy tightening. We'll be discussing on global economic prospects as of June 2022, as per report by World Bank. Surging energy and food prices heighten the risk of a prolonged period of global stagflation, reminiscent of the 1970s. Broad-based inflationary pressures in the US may precipitate more aggressive monetary tightening, potentially triggering financial stress in emerging markets and developing economies, known as EMDEs. Global growth could be substantially weaker if key downside risks were to materialize. Despite central bank rate hikes, real rates remain low amid high inflation, suggesting that further policy tightening may be needed. To address rising food insecurity, EMDE policymakers can deploy targeted support rather than distortionary price controls, which are already widespread. This demonstrates energy and food prices as displays the percentage change in monthly energy and food price indices over a 24-month period. This shows that facilitate a comparison of the April 22 trough with the most recent data. Accordingly, both energy and food prices are increasing, although the magnitude differs slightly. Magnitude of rate hikes and US core CPI during previous Federal Reserve tightening cycles are being shown in this figure. Blue bars show the extent of policy rate increases during previous tightening cycles. The value for 2023 is an estimate based on market expectations for the level of the Fed funds rate in mid-2023. US core CPI for 23 shows latest data associated with tightening cycle. This demonstrates real policy interest rates and inflation as against United States and Euro area. We can see that latest policy interest rates and inflation figures are higher than 2000 to 2021 average of same. This figure depicts economies with price controls. Listed price control policies are retrieved from World Trade Organization's trade policy review publications. Sample includes 21 low-income countries and 56 other emerging markets. Supply chains continue to be unclear under strain amid new COVID-19 lockdowns affecting major Asian ports and logistical disruptions associated with Russia's invasion of Ukraine. Global trade growth has been substantially revised down, in part reflecting significant value chain disruptions associated with the war. This shows global supply chain pressures. We can see from 2020 onwards, standard deviations from average value is being increased for global supply chain. This demonstrates global trade forecast. Accordingly, it is being reduced considerably. And in 2023, it is somewhere around 4% as per forecast. The Russian Federation's invasion of Ukraine has significantly accelerated the projected slowdown in global growth. Forecasts for most economies have been downgraded for this year. Headwinds from the war are adding to large cumulative losses in output since the onset of the pandemic, particularly for commodity importing emerging market and developing economies. Surging commodity prices have contributed to broadening price pressures, pushing inflation above central bank targets in the vast majority of inflation targeting countries. For many emerging markets, adverse shocks from the pandemic and war have reversed the catch up for per capita income with advanced economies. This demonstrates global growth. We can see that advanced economies are reporting only less than 3% growth. However, emerging markets are reporting increased trend during 2022 to 24 period. This figure demonstrates contributions to global growth. Major part is contributed by other emerging markets and developing economies. However, China is contributing considerably to global growth, and advanced economies also reports nearly half of the contributions for global growth. This depicts forecast revisions to 2022 growth. Emerging markets have been affected to nearly 70%. However, for downgrade trend for advanced economies being reported as nearly 80% or more. Cumulative output losses for 2020 to 2024 are shown here. Accordingly, emerging markets reports output losses somewhere around 35%, whereas world average is somewhere around 20 to 22. Commodity prices surged in the first half of 2022, especially for those commodities of which the Russian Federation and Ukraine are major global exporters. Further, disruption to Russia's exports of crude oil could be offset by inventory releases or the scaling up of production among other major exporters. However, increasing production would take time. Increase in energy prices this year is unusual compared with previous episodes since price increases have been broad-based across all fuels, reducing the possibilities for substitution. Commodity price changes are shown here. Accordingly, we can see gradual decrease for natural gas. However, fertilizers and wheat flour prices are being increased. Brent oil is being reduced as per this data. Russian Federation's and Ukraine's commodity exports are shown. Data for energy and food is trade volume. Data for metals and minerals is trade values. Fertilizers include phosphate rock and potash minerals and ammonia-based non-minerals. We can see global exports have been contributed from Russian Federations export related goods and services. Mostly here, energy, metals and minerals, and food exports of Russia. Alternative sources of oil as shown exports of Russian oil and oil produced prior to the war in Ukraine and alternative sources of supply. Inventory releases refer to the current announced release of oil by IEA members, including the US. This shows real energy prices during price spikes. Figure shows the annual price of coal, Brent crude oil, and European natural gas deflated using US CPI. Depicts the current price forecast. Inflation expectations have also risen further. The war triggered an initial appreciation of the US dollar that was larger than those following the taper tantrum and previous geopolitical events. Sovereign spreads have increased across EMDEs, but by substantially more among commodity importers relative to commodity exporters. This shows change in emerging market sovereign spreads by commodity exporter status. Figure shows the difference in bond spreads between the latest available data and February 23 this year, day prior to the invasion of Ukraine. Reference for today's presentation is from World Bank's flagship report titled as Global Economic Prospects. Thanks for watching.